I'm only touching major banks.
Win!
These are the steps I would take if I had to start from scratch with my credit score in 2026. And when I say start from scratch, I mean no score, no history, no relationships, no nothing. And this video is only for those who want to go out and get real approvals, not the $500 credit starter program that they had at banks. Here's exactly what I would do. And to be honest, this is what I'm not seeing a lot of on the internet. So that being said, I decided to make this video. Now, this video is not an overnight success type of thing. This is not a credit hack. This is not any of those things. This is how I will build my credit the right way without having to worry about getting jammed up in the long run. This video is not about kickoff, it's not about self, it's not about any of those quote-unquote credit builder accounts that I'm seeing a lot of people adding to the profiles and ultimately still getting them denied for a lot of loans. One thing I see a lot of people do is they're building for the score. And I know that may sound a little contradicting, but credit is not all about the score, it's about the profile. I can't stress that enough. And with that being said, I see a lot of people building their profile just to see a higher score. And to get those higher scores, they're just adding a bunch of secure credit cards and a bunch of credit builder accounts. The thing is, I see a lot of good credit scores, but the average person that comes to me wonders why they still can't get approved for things even though their credit score is high. And lo and behold, I checked their credit profile and they have a bunch of the same accounts that I just listed. The truth is the underwriters look at more than just the score. They look at who's already lending to you. Look at if they see any familiar names on your report. So I like to use this as an example. Let's just say you go out and borrow money from a bunch of different friends, right? And you have a good relationship with a bunch of different friends. You now can go to that friend that you haven't asked for money for because your reputation is so good and ask them for money as well because you're known for having a good relationship with everybody else who actually loaned you money in the past. So with that being said, when you go and ask that new friend and you now have good rapport with the other people, you're less of a risk in that person's eyes and they're more willing to give to you as well. The banks work the same way. So with that being said, I will only deal with reputable banks. And when I say reputable banks, I mean Bank of America, Chase, Wells Fargo. These are all banks that if someone pulls your file, they know that, okay, this is a major bank. And if they having a good relationship with this bank, we can trust them as well. So step one, only major banks. Build with real banks only. If I'm starting over in 2026, I'm only touching major banks. Why? Because internal bank relationships matter a lot more than score padding. And a lot of banks are catching on to score padding and they're denying people just because they're noticing what you're doing. That's the thing. As time goes on, the banks start to evolve. More and more people are using certain methods. Banks are catching on and reverting their system to another method that now rejects the old method. So you have to keep up with the times when it comes to credit. And that's why I'm making this video specifically for what's working currently at the moment. So with all that being said, I will go to a major bank and open up a checking account. Something that my direct deposits can go in. Something that I can build activity with. And I'm doing all of this before I'm even applying for any. Most people don't know this, but internal bank data is a lot stronger than bureau data. When banks see your deposits, they see your stability, your behavior, your approval odds change a lot. And that's hacker level credit building. Step two, the first trade line strategy. So the first month, we're gonna add a secure card from a major bank. Not kickoff, not self, none of those other builder accounts. We're going to a major bank. And again, when I say major bank, I mean Capital One, Bank of America, US Bank, Citibank, PNC, Truist. There's a bunch of different major banks. And I'm sure you understand what I mean by major banks by now. So granted, I just listed off a bunch of different banks, but we're only going to add one. And what we're going to do is add a deposit that's meaningful. If you can, put $2,500. If you can't, that's okay as well. Put down something meaningful. If you can put down $2,500, that's perfect. Stay away from smaller amounts, and I'm going to get to why I'm saying that later on in this book. So what you're doing now is training the algorithm. So I know a lot of people hear about the algorithm on Facebook, the Instagram, TikTok, but banks have an algorithm as well. And what you're doing is you're training that algorithm on how it actually views you. Smaller behavior, smaller approvals. All right, so the next step is the utilization hack that everybody missed. This right here is what nobody's talking about. You don't just keep the utilization under 10%. You control the statement balance time. So what I would do, I would spend on the card and I would pay it before the statement closes. Let 3 to 5% report, not zero. Zero credit utilization doesn't build stronger revolving behavior. Banks want to see what's called responsible usage, not inactivity. And that's the difference that most people don't understand. Now, to use the friend reference like I used earlier, if a friend tells you if they give you $10 and you use it, you have to give them back $15, but you never use the $10, you just hold it, that person may be a little hesitant on giving you the money, being that they may not get more on top of the money that they loaned you because that's what they were in it for. Now, banks are in it for gain. Now, if you're not using what they give you, there's no gain in. So now the banks want to know that if I give you this, there's going to be some sort of gain in return if you use. Now, if you don't use the credit that's available to you and it reflects as such on your credit report, banks may be a little hesitant when it comes to giving you money because we have to remember banks are in the business of profiting off of us. All right, the next step is velocity control. And this is where people kill their profile. They apply for store cards, random online cards, buy now, pay later accounts. They have 5 inquiries in 60 days and they think they're building credit. But the reality is you're signaling risk to the banks. If I'm rebuilding in 2026, I'm starting with 1 account, 6 months clean history, no other applications, meaning no other inquiries. Then 6 to 7 months, I'm adding a second major bank. Different issue. So you started with Chase, go to Bank of America. Now this is what you call building depth. And that moves us over to the next step. And that's mixing without looking desperate. I see a lot of people speaking on credit mix. So they run out and grab a credit builder loan like Kickoff or So. Here's what I would do instead. If I really want the installment history, I'll go to a credit union. Open a second secure loan, not a fintech app. Like I said, do not go to Kickoff or So. Credit unions report as real lenders. So with that being said, that trade line carries more weight in the long run. That's the difference between credit education and credit strategy. That brings me over to the next step, internal relationship leverage. Now this is the part that I haven't really seen much on YouTube, and this is why I'm throwing it in this video. After 6 to 9 months, I haven't been applying blindly for anything. I'm calling the bank I already have a relationship with, and I'm asking about internal pre-approvals. Like I said earlier in this video, banks have internal scoring models. You can get approved internally even if your credit score isn't perfect. And that right there is how real funding players work. So now we're gonna move over to what I wouldn't do in 2026 after we just went over what we should be doing in 2026. What we're not gonna do is heavy reliance on credit builder accounts. I know I already spoke on this, but I have to keep drilling this in your head because I see a lot of promotion on credit builder accounts and how you should be adding them nonstop to your credit file. Another one is authorized user stuffing. I see a lot of clients come to me, 6 to 7 authorized users and 1 primary account, and they wonder why they cannot get approved. The thing is, banks are looking at this and they're not solely judging you off of somebody else's behavior with their credit. We have to keep that in mind. If I go to ask my friend for money, I can't say that, hey, our other friend is responsible with paying our back. You should give me money too, because that doesn't, I'm not going to be rewarded for somebody else's good payment history. It doesn't work like that, unfortunately. I know a lot of people preach, add trade lines, but it's not that simple. Banks are catching on and they're starting to discredit trade lines more than you think. The next thing I would stay away from is artificial balance manipulation. And I can't lie. At some point, I was telling people to do this. And what that is that's going and paying your deal. You're doing like basically what's called a ghost payment. You're going in, you're making a false payment, and it's signaling the credit bureaus to report that false payment on your report date to the bureau, and it does reflect to the bureau that you paid this off. But I'm seeing a lot of cars get shut down for doing this, so it's not worth doing it in 2026 because a lot of people have tried this. It has burnt out. The banks are changing their models, like I said earlier, and it's closing accounts. So in the long run, it's going to hurt you more than help you. So do not do that in 2026. Buy now, pay later accounts. So I know a lot of times we go when we buy something online and we see that we can actually opt into lower monthly payments for whatever that item is through Affirm, Klarna, Sizzle. There's a bunch of different buy now, pay later accounts. And granted, they do report to your credit, but a lot of banks are frowning upon these accounts and they're just looking at it as useless accounts. So it's better to keep all of this noise off of your credit report and more so focus on major accounts only being posted on your credit report. Now, I'm not going to totally disregard them and say that they don't help build your credit score, but there's a cap to it. Now, if you're okay, but only getting $1,000 limits here and there, then okay, add them to your account as much as you want to. But if you want to go out and get the $20,000, $30,000, $40,000 limits, I would stay far away from those buy now, pay later accounts because a lot of banks are looking down on these accounts and they're discrediting it. Now, we're still early in the year. We're only in February. So if you start this now, you will be in perfect condition at the end of the year if you follow the rules directly. What we're doing now is building out a 12-month plan. Now, granted, you're still going to be able to benefit throughout the 12 months, but I want to be able to give you a longer strategy and not just something that's quick, a 3-month plan or whatever. I want to give you a longer strategy that you can follow for the 12 months to not have the ultimate credit score to really go out and get a home loan, whatever it is that you're really trying to get, because you structured your file the right way and you didn't just go based on what you're seeing on Instagram as far as credit builder accounts. Now, if you did this correctly, in 12 months, you should have 2 revolving accounts, 1 installment loan, perfect payment history, low credit utilization, low inquiries, a strong bank relationship. Now, when you go and apply, you're not a beginner, you're structured. And structured profiles is what get the real approvals. So granted, it's a lot of people preaching that they have an inside connect and they can get you approved for certain things. But that inside connect still needs to see certain things reporting in your report, because a lot of these banks are using AI, behavior modeling, velocity tracking, they're pattern detecting. In 2026, you cannot trick the system, but you can align with it. So with all of that being said, if you want the step-by-step inside guide on what I use personally for me and my clients, you're going to have to join the Winner Serpent. And I'm not here trying to sell you anything. You need to be selling this to yourself. This is only to help you. So tap the link down below. If you want more videos like this, make sure you subscribe to the channel, hit the thumbs up on this video so more people can see it, and stay tuned for more. I will be giving out little hacks. I won't be giving you guys everything, but I wanted to make this video on if I was to be starting my credit profile from scratch in 2026, this is what I would do. But if you want a more in-depth model of how to do it, why to do it, when to do it, tap the link in the description. See you on the other side. Let's win.